News coming through actually. The SGX Nifty is in the green. Most of the Asian markets are trading higher. Investors are awaiting the US non-farm payroll data later in the evening, so all eyes will be on that as well. But our research team is here to give you the list of top 10 stocks as we head into trade today. Well, first up, I think all eyes will be on Reliance because the Rel Jio fiber pricing has been announced. So it's a big consumer story as well. Rima's here to tell us more on that. Hi, Rima.
Hi Sonia. So there are 6 plans which start with 699 and they go all the way up to that 8,500 mark, which is X of GST, which if you add the 18% GST, the plans start at 825. For one, there is no free offering similar to what we had seen when Telecom launched 3 years ago, when they had given 6 months of free service. So basically the focus of Reliance broadband service seems to be on high ARPU as well as customer stickiness, and therefore the subscriber ramp up is going to be gradual compared to what we saw in Telecom. Their base plan, as we said, stands at 699. If you include the tax, it stands at 825 rupees per month. And in this, you get a speed of 100 Mbps and you get a data limit of 100 GB. Plus, there will be an incremental 50 GB as a part of the incremental. Analysts say the churn from existing broadband players like an Airtel, Vodafone, ACT, U Broadband will be limited. The bigger impact could be on BSNL and MTNL, who together command close to about 9 to 10 million subscribers. It's also seen positive for cable as well as DTH players because cable TV is not provided as a part of these services, and even on PVR the impact is not seen very material because remember they created a lot of buzz when they announced the first day first show, but that premium free content is available only on the higher price plans which start at 2,500 for 4,000 as well as for the 8,500 plan. So the impact on these stocks won't be very material.
Okay, Rima, thanks a lot for that.
And Bharti should have a relief.
Bharti should have relief rally. I tell you one thing. Remember the day it was announced, just pull out, Reliance went to 1,300 and where Reliance is now. And where's PVR? Just pull out PVR. And I think that day we made this point. That PVR perhaps, we had a guest also saying this, making this point. They won't get impacted. And it's not as easy in a country like India to change these kind of habits. And from 1380 thereabout to 1492, it's already had a bit of a rally, but perhaps there could be some more. And of course, Bharti, Dish TV, these could be stocks which you could focus on. But Lata, Indiabulls Housing, there's some fresh news on that.
Yeah, I mean, on the Delhi High Court website, there is a plea filed, public interest litigation filed by a group called Citizens Whistleblowers Forum. And importantly, the advocate is Kamini Jaiswal, who is a very prominent advocate in Delhi. And the PIL says that many borrowers, and they name quite a few, who have borrowed from Indiabulls have paid a part of it or invested a part in the promoter entities. So basically, the charge is Indiabulls is borrowing money from banks, markets, etc. But as a fee, the promoter entities get money from the borrowers. So, they are actually alleging that the promoters are making money on the loans they give out of public funds, out of, shareholder funds. The allegation also goes on to say that there are about 12,000 companies registered on just one address. And those are the shell, some of them are the shell promoter companies. Now, Indiabulls has replied to it. They have said to the exchange that these are malicious remarks intended to create turbulence in the stock price. Instead of going to the regulators, the petitioners are going to court. So obviously, I guess they would have expected them to go to the NHB in this case. And they are also saying that the petitioners are deliberately filing it exactly at a time when it is sensitive for Indiabulls because the license request is being considered by LVB. They said they will fight it out in court.
Okay, well, the stock price has already been very turbulent. I mean, it's down 50% this year already. It doesn't need this information to fall further. Well, let's keep an eye out on this stock. Tech Mahindra is the other one, actually. It bagged a very large multi-year deal. So let's find out more. Rima, the contours of this deal?
Well, yes, it's a very large deal. It's a multi-year deal that they won from AT&T. The company has not quantified the size of the deal, but it is estimated to be one of the largest deals won in the recent history of the company, and the scope of the work cuts through various offerings. Credit to his estimates the size to be about 600 million going up to 800 million over the next 5 to 7 years. And this is a very strong communication deal, and it is seen as a precursor to 5G spend, which could come in the next 2 to 3 years. So it's a big positive for Tech Mahindra. Though in the initial years, it could be a bit margin dilutive, but expect the company to recoup margins as the deal tenor goes up.
Prima, thanks a lot for that. Now, Sun Pharma is interesting. You remember that newspaper report about clean sheet, the stock rallied on expiry day. And after that, there was a money control report that a forensic audit actually has been ordered by SEBI. And looks like that report actually was right. Nimesh?
Yes, Anuj. So, finally, after putting, speculations to end in the last few days, Sun Pharma has clarified to the exchanges last evening that yes, there is a forensic audit by SEBI, and that forensic audit is for the years ending 2016, 2017, and 2018. So, until 18, there is a forensic audit going on for the last 3 years, and it's an ongoing thing which is currently on by SEBI. So, clearly negative for Sun Pharma. Now, at least it puts end to all the speculation whether they're getting a clean sheet or not. But yes, they've clarified to exchanges that there is a forensic audit going on for the years ending 16, 17, and 18 by SEBI.
Okay, that's very important coming from the company itself. Prabhat Dairy, Mangalam, I mean, unusual delisting of shares.
Absolutely, Lata. Unusual indeed, because what had happened, and this makes two unusual news pieces. So we start with the delisting news. The board has announced that they will meet to consider voluntary delisting of the company. The promoters who own 51.1% stake in the company are offering to buy the public stake, which is around 49.9%. And that's interesting because in January, the company had sold a subsidiary which had 98% of its business, entire business if you must, to Lactalis Group via the subsidiary route. And now the reason that they're saying that they're looking to delist is because they believe that the minority shareholders will, one, get an exit, and all those who wanted the dairy business will not have any interest holding the remaining 2% of the business that they have. If they had to do that, then perhaps they could have sold it to Lactalis instead of selling it via the subsidiary as well. So maybe the stock moves higher today because the delisting news is there and the price could be higher. But from a corporate governance standpoint, there are a lot of question marks.
Okay, Mangalam, thanks a lot for that. I distinctly remember on that day making this angst, and it should not be allowed. 98% business being sold. It simply should have sold the company. There should have been an open offer, and this really has been terrible. Terrible is the word to use. And I tell you one more thing. I don't care where the stock opens. If the promoter has clearly shown you that he cares little about the small investor, this would also end badly. And now you could offer 130 rupees also. It doesn't matter. I'm not saying that will be offered. It'll be much less, I'm sure. But this really has been a really bad case. The ingredients were in place. And next time something like this happens, where a promoter is selling a business, large business, which is 90-95% of the company, and is doing it in this manner, that's the clearest red flag, and you should get out of that company. Simple as that. Whatever exit you get, take it, because after that you won't get an exit.
I would think the regulator should step in these cases, but or proxy advisors should make a noise. This is a discussion for another day. But the auto woes continue with Ashok Leyland announcing a shutdown.
Yes, in fact, you remember 2 days ago we reported that Ashok Leyland's numbers, the medium and heavy commercial vehicle sales for the month of August was down 70%. Now there's a closure at their Ennore plant in Chennai, a 5-day closure that they have announced. That starts today, that's September 6th, goes on till 11th. And remember, Ennore plant already saw 10 days of no production in August. So they've announced another one. This is because of the demand slump, etc. That they have made this announcement. And I want to also mention that Ashok Leyland in the last 2 months, just pull up the stock chart, it's gone from 90 to 60 in less than 2 months because of this kind of demand slump, and looks like the problems are just getting worse.
God, this is scary. Okay, Anuj, anything on technicals that you're watching?
Not technicals, but stocks that I'm watching out for today. One is TVS Motor. Now, this is clearly one stock which is beginning to outperform, and in fact has done that. 355 is where we spotted it first after the August sales. The August sales were good. Month on month, there was an improvement. In fact, that's one thing which has stood out. Month on month, the two-wheeler companies have done well. And TVS in particular has done reasonably well. So that's a stock which is gaining ground. That's first stock to watch. The second stock that I'm watching out for is TCS. Now, it's for two reasons. A, I think the rupee's fall might be overdone and you might see some bit of recovery in rupee. And two, it's showing signs of underperforming Infosys. So that's one more reason that I'll watch out for TCS as well.
Okay, well, we have many technology stocks on our radar today because of good news as well. So we'll keep talking about that. But here's a quick recap of our top stocks. Stocks with positive news flow. Tech Mahindra, as we said, that big order win coming through. Prabhat Dairy, Reliance Industries, Bharti Airtel, Vodafone Idea, PVR, Dish TV, Stocks with negative news flow: Sun Pharma, Ashok Leyland, Indiabulls Housing, of course, Indiabulls Housing Finance. Prabhat Dairy, I don't think will be in.
Prabhat Dairy not in green. It may open in green, and but I have my doubts on that.
Okay, well, let's move on then and talk about Tech Mahindra, because the company has announced a very large multi-year deal with AT&T. The size of the deal is not quantified, but is estimated to be one of the largest deals in the recent history of the company. Manoj Bhatt, the CFO of Tech Mahindra, joins us on the phone line to talk about that. Mr. Bhatt, good morning and thanks for joining us. Can you tell us a little more about, this deal itself? What is the size of the deal? You haven't quantified it, but can you give us some ballpark estimates?
Good morning. So I think if I look at the deal, I think it is a deal which is a multi-year deal. It's about a 6.5-year deal, where we will help AT&T in their transformation journey using multiple digital technologies, as well as it's also around both network facing as well as the IT side of things. So I think in a lot of ways it is clearly something which we are very happy to partner with AT&T on this journey. As far as the deal size goes, I mean, we are not disclosing that, but as you mentioned, I think it is one of the largest, if not the largest deal in our history, and it's a significant uptick in our relationship with AT&T, and this will come into our revenue streams going forward, starting from Q3, possibly Q4, and well into next year.
Mr. Bhatt, why, if it is the largest deal in your history, why are you fighting shy of telling us the number? That leads to problems. Credit Suisse report that I'm quoting says that it is between $600 and $800 million over a 5 to 7 year period. It will just lead to unnecessary guesswork and maybe investor disappointment. Why not tell us what the number is?
Lata, I think we are bound by certain confidentiality restrictions. That's the reason. Otherwise, we would have been happy to disclose.
Can you tell us at least what the margin profile of this deal could be? I mean, will it be margin dilutive, at least in the initial years?
So initially, and we had talked about this at our quarter-end results also, as many of these deals come in initially, there will be an element of transition cost, which will be margin dilutive, at least for the next 2-3 quarters, as we ramp up and as we invest upfront in terms of actually putting in the resources, making the changes happen, and making the transformation happen. So initially, it will be pulling down margins, and that's what we had commented even in our quarter results, that as these deals come in, initially there will be a little bit of an element of margin coming down, which will then be recouped over the life of the deal.
Okay. But you expect that the deal is going to be at least over 5 to 7 years. That much you are allowed to confirm?
Yeah.
Okay. Can you tell us a little more about generally the deal scene? It's very good to hear that orders are coming in a backdrop where everyone talks about global economy slowing. How is the bidding scene?
So from our perspective, and we spoke about this about a month and a half back during our results also, I think it's a very strong funnel, and I think we are seeing deal conversions happen. I think we are looking at multiple deals across areas, and this could be across multiple geographies also. And the common theme seems to be, I think, we are seeing scaling up of digital is number one. Number two, I think we are seeing more stability from customers in terms of a viewpoint over 5 years and longer. And that's why I think some of these deals are back in play. And the third thing is that I think if I look at deal cycles, I think I think most of the clients are actually reaching decision making quicker now than they were in the past, which is always a good thing. So we are seeing a lot of the deals convert, which is a good sign. And I think it's probably true for the industry that the deal wins are up. And so that's a indication that while there are enough doubts around what is going to happen to the global economy, I think from a customer perspective, we are seeing a lot more willingness to decide and move on transformation initiative.
That's actually very good news. I mean, decision making is quicker now than before. It's good to hear. But on this particular deal, on the AT&T deal itself, what kind of growth can we expect from the communication vertical? And is this deal a precursor to more 5G spending by telcos?
So I think from a overall vertical perspective, I think we are seeing investments in new technology areas, and we are also seeing, I think, digital as a core spending area, which has been increasing consistently. Coming to 5G, I think on this particular deal also, there will be a bit of preparatory work on 5G as AT&T looks to get into the 5G network area. I think we'll see transformation happening even on the IT side, and we'll be helping them with that. But on 5G itself, I think we have always said that from our perspective, the core network changes and network rollout will happen in FY21 and not before that. And I think that's what I think the situation still remains.
Well, a final question. Margins apart, obviously, since you all will have to spend to ramp up capacity, your FY19 constant currency revenue grew at 5.8%. Can we expect it to be higher? Are you likely to move towards high single digits?
So I think, Lata, I don't want to give a number because if I look at our commentary in the past also, I think while the communication business is stronger, I think the enterprise business, I think we have had a couple of weak quarters. That will improve going into the second half. But on a full year basis, I think the number might be lower than last year. So overall, I think while we might do better than last year, but it's something which I think it's a quarter-on-quarter monitoring which we'll have to do. Because I think, as I said, on the enterprise side, we still are in the process of converting some of the deals, and we'll know better at the end of the quarter.
Okay, so what stayed with us is that you've mentioned the decision making is now quicker than before. So can we safely assume that the deal wins per quarter? I mean, it's been in a range of around $400 to $500 million for at least the last 3 quarters. You think it can move well above that range in the second half of the year?
I think, Sonia, I don't want to give a commentary on what deal wins could be, but I know for sure that the revenue growth for the second half of the year will be much stronger than the first half on the basis of whatever is happening and what we are seeing in terms of deal wins and the funnel.
Okay. All right. On that positive note, thank you very much, Manoj Bhatt, and many congratulations for what is the biggest deal in your company's history. That's positive even for the IT sector. I think that deals are getting signed faster in a time when we have a drought of good news. This is really excellent news. We take a break. We're going to be having an expert joining us, Dhananjay Sinha of IDFC Securities.